So we're here to talk about the new endorsements. There will be 28 new endorsements that will be coming into effect on September 1st. A large part of the endorsements, and the biggest reason for coming out here today, is to talk to you about the revisions to the Alta 9 endorsements. There are significant endorsements. In part, all of this was started because of a case up in Ohio where a plaintiff's lawyer decided that once he read the Alta 9 endorsement and the part of the language that says that the part of the endorsement that says that if there is a mineral exploration and damage to property, that the title insurance policy would respond. The title industry never intended that the title insurance endorsement was to include coverages such as fracking damages and physical damage to the property, but the plaintiff's lawyer took a shot at it. They had an initial victory in the trial court, and so the title industry decided, okay, we need to revise the Alta 9s because we definitely don't want people to think we're going to cover for basic tort damages in a title insurance policy. So they started the process of examining, and as often happens, the process got more complicated and they got more inclusive in what they were going to be looking at. So what we've ended up with is a new series of Alta 9s that, to get the same coverage that you would have had under the old Alta 9s, you basically would have to go with an Alta 9, an Alta 28, and an Alta 35. So this is going to be a discussion basically of all of those endorsements. There are additional endorsements that are going into effect on September 1st. And they are various and differing concepts in all of those. But we're going to concentrate more on the 9s. And effectively, there are two major renovations to the Alta 9-06. The primary one is on paragraph 5 of page 2 of the endorsements. There are now 3 specific exceptions that we don't cover for hazardous materials, we don't cover for damages from fire, fracking, explosion, subsidence, or earthquake, and the last part is we don't cover for the negligence of a person exploring for minerals. So all of the 9s are going to contain this exception language that's going to show that we're not going to cover those items. The other part of the Alta 9 that is not the same, the basic Alta 9-06, is the coverage for private rights. Private rights in a loan policy will now be covered by the 9.6, and private rights in an owner's policy will be covered by a 9.9 endorsement. The basis for the endorsements, and we had this discussion a few minutes ago before we started this, that basically the policy covers certain things, certain matters that are a part of the transaction. Then there are exceptions that are included in the policy because in the title search you find a survey, and there are servitudes, there are restrictions, there are encroachments that you can see from a survey. So all of these things result in an exception. Most lenders don't want the exceptions, so that's where endorsements came from. Endorsements came to be a way to get rid of the exceptions. In the old days, and when I first started, even when I first started with First American in 2007, a lot of the endorsement coverage was provided by, at the end of the exception, one would add, however, the company affirmatively assures the insured that there will, against any loss or damage suffered as a result of a requirement for removal after the decision of a court of competent jurisdiction. So that was generally added at the end of the exception to give the coverage. Well, it's now going to have to be done in the form of an endorsement, which is better for all of us, because in the endorsement you can fine-tune exactly what the coverage is. And then the second thing is if it's a separate endorsement, there's going to be a separate charge for it. So that will help to increase, some on the revenue side. The 9.6 and the 9.9 as private rights coverage. Private rights are designated and defined in those two endorsements as private assessments, right of first refusal, options to purchase, or a right to approve a purchaser in a transaction. So if we have an exception or a set of covenants and restrictions that contains any one of those things, assessments, a right of first refusal, a right or an option to purchase, or a right to approve whoever is the purchaser, then those restrictions contain a private right. If the lender sees that exception and decides that they want affirmative coverage over that private right, we may or may not be willing to give coverage. If the private right, such as an option, is more than 10 years old, we're probably going to be willing to give coverage for that. If the assessment is a standard homeowners association, that if the mortgage is in place and then the assessment hits and the assessment ranks behind the mortgage, we'll probably give coverage over that. If that is an assessment that has a super priority because it says that we are going to have the right to file a lien, and if we do file a lien, it'll be treated like ad valorem taxes and it will rank ahead of the mortgage, then we've got a problem, and we're probably not going to issue that coverage. So these endorsements are going to require a lot more underwriting, and that's a part of what the companies were trying to get to. It became real clear for many years that people were getting coverages just because the lender wanted it, and people were not analyzing exactly what the coverage was we were giving, and is that really something we should be giving. So the purpose of the revisions was to, number one, take care of the problem in that case, but number two, they also wanted to make sure that if we were providing coverage to lenders and owners, we were understanding what we were doing in that process. It's very similar to what they've asked us to do under the mechanic lien risk issues, which we had a previous meeting about. And it's going back to the same phrase, know the transaction. We need to know what it is we're issuing when we issue the policies. So now we have the 9, which has basically everything the 9 had before, except it doesn't have the private rights, and it also does not have this potential for loss under the mineral portion, for mineral exploration. The next endorsement in the stack of endorsements is the 9.1. The 9.1 is owner's coverage, and it's an Alta 9 coverage, 9.1, and it is coverage for covenants, conditions, and restrictions. It does not include encroachments. It does not include minerals, and it's for an owner's policy in an unimproved property. The 9.2 is a similar coverage. It's an owner's policy, and it's for coverage, again, for the same thing, covenants, conditions, and restrictions. And it is intended to be for a property that is improved. Okay? So it's owner's coverage, improved property, and again, it's a CCR. It's a covenant, condition, restriction endorsement. Okay, here's the big one, the 9.3. 9.3 has basically been the 9 with additional stuff. The additional stuff primarily being lawn, shrubbery, and trees, that if you have a damage, that would be covered under a standard 9. Not only are your building and improvements coverage, but your lawn, shrubbery, and trees would be covered under the 9.3. Well, now the 9.3 is completely different. It is only a CCR. It is only covering covenants, conditions, and restrictions, which that basically means that if there are any covenants, they aren't violated. That's what that endorsement covers. There is a modicum of an encroachment coverage, but it refers to encroachments into setback lines. But it's only setback lines. It's not servitudes, and it's not across property lines. We'll deal with those a little bit later. So the 9.3 is not going to be anything that a residential lender is going to want, probably. Most of them are not going to just want CCR coverage. If anything, they would want even more than what they had before. So the CCR coverage is probably not going to be satisfactory. If you have a lender asking for the 9.3, I highly recommend and have been telling people to provide the lender a copy of the new 9.3. Say, this is not the same 9.3 that we've had for years. Are you sure this is really what you're looking for? And if you have an opportunity with Keith or anyone else that you might want to deal with, is go ahead and meet with them and explain to them, this is the circumstance. If you've been thinking about doing a 9.3 and you haven't been, you don't want it. If you've been doing it, you don't want this one because it's not what you had before. So now we've done the 9.3. We don't have a 9.4 or a 9.5 now. Those have been.
The regular 9 is the same.
The regular 9 is the same, except for the two parts that are out.
Okay.
The private rights and then the damage issue. Yes.
Your thought would be, once the lenders are made aware of all this, that they're going to want more than just the old 9.
No, well, they may want the private rights, okay? If in the exceptions or in the covenants or conditions, if there's a covenant or condition that relates to those private rights, then they may want the private rights coverage. And the private rights coverage is going to be just would have to be added to the regular 9 coverage, correct?
So it would be in addition to
Yes.
the 9?
Yes.
An endorsement?
Yeah.
Yes.
Is it in the,
I'm going back
This
to
time?
the owner's
Yeah.
part. I mean, I've never done endorsements on an owner's policy.
It's available.
Okay.
Well,
okay.
let me just say this, and it's a good question. The question was whether it was about the issue of owner's coverage and the change to the owner's coverage. Suffice it to say, most owners, if you can get them to buy a policy, it's enough of a miracle. Asking for additional coverage, they generally don't have a clue what additional coverage they might want unless you have an attorney who's buying the property who says he wants every endorsement in the books, okay? So generally speaking, there aren't going to be those on a residential transaction. However, on commercial transactions, they often are more aggressive and do ask for more endorsements. So to the extent that you do some commercial transactions, you may get requests for some of the endorsements, particularly some of the 9s. And now, if you do, under the new setup, it's probably going to be the 9.3, and it probably will also require the issuance of a 28 and a 35. Okay, so the 9.1, we've gone through the 9.3, the 9.4, and the 9.5. We don't have any more. The 9.6 we already talked about because that's the private rights. 9.9 we already talked about because that's the private rights on an owner's policy. Now, I can't do the 9.7 and the 9.8 without having to go backwards in time a little bit and cover something else that you may or may not be familiar with. The Alta 3.2 came out a couple of years ago. The Alta 3 series is for zoning. The Alta 1 is for zoning on an unimproved property. The Alta 3.1 was zoning on an improved property. Well, as everyone knows, there's an awful lot of construction going on around the country. Well, the lenders decided we don't need an Alta anything. We just want you to take the 3 and we want you to add into it that upon completion of the new buildings and improvements, the zoning is still going to be okay. Well, Alta decided after some discussion to create a 3.2. And the 3.2 is a zoning endorsement that effectively says, assuming that the building is completed according to plans and specifications as a defined term and as an identified set of plans and specifications, then assuming that the construction is completed in accordance with those plans and specifications, you will be in the building and improvements will be properly zoned after the construction. So they came up with the 3.2. It was kind of what has happened thus far with the 3.2 is, as most of what happens with the 3 and the 3.1, is title companies would go to the zoning office and say, here's my property, here's what they're going to do with it, are we okay? And for the most part, that was the easy way to do it. So what some have been doing, we haven't had a whole bunch of them issued, they've only been in effect for less than a year, the 3.2. What people have done is they've taken the plans and the specifications and taken those down to the zoning office and said, assuming it's built like this, is this going to be okay? And often they get a letter or a note or something from the zoning office saying, yes, it'll be acceptable. So that's what most people have been doing with the issuance of the 3.2. So once this revision starts, of course, Alta decided if we're going to do all these 9s, we probably need to do some 9s for land under development. Now, this is going to be primarily commercial. I don't see how it's going to apply in a residential context, because I don't think, for the most part, that the plans and specifications are going to be detailed enough to qualify to fall into the position of a 9, into a land under development. Most plans and specifications in a residential context just don't have that much detail to them. Some of them do. I mean, you get up in the $1 million range or $2 million range, and you're probably going to have some pretty good plans and specifications. But for the most part, in the general practice of your residential construction, it's not going to happen. But in a commercial construction, we can bet it's going to happen. Now, to me, the most dangerous part about the endorsement, at least in the zoning context, some of the people have been able to get some comfort from the zoning office. Well, guess what? We won't have the zoning office relative to the 9 coverage. That's going to have to come from the attorneys who are examining the titles, who are now going to have to examine the plans and specifications and make sure that those plans and specifications are not going to end up in a situation of an encroachment or some type of damage resulting from somebody wanting to exercise a mineral servitude. You're unfortunate enough in Lafayette that you have a large enough vacant property to where it could still be an issue, where you may have active minerals and say a 70 or 80 acre tract that somebody now wants to turn into a subdivision. If they decide they want, or the lender decides they want the coverage for the land under development, then somebody's going to have to make a determination that those mineral rights are not going to create a problem, or we're not going to be able to issue the endorsement. So it's going to be a lot more difficult because we won't have the help of the zoning office, but the 9.7 and the 9.8 are going to be those endorsements for Alta 9 type coverage. Now, unfortunately, Alta didn't keep them consistent. Or actually, they kind of kept them consistent, but now the 9.7 coverage on the Alta 9 is going to include covenants, it's going to include restrictions, encroachments, and minerals. The owner's policy is only going to be covenants, conditions, and restrictions. So in a loan policy context, it's probably consistent with some of Alta's philosophies that the lender is going to want more coverage, but not at an additional premium. But under a land under development, it's going to make it much more difficult. And even though the endorsements are not segregated into the 9, the 28, and the 35, our thought at this point is that underwriting-wise, we're going to have to be much more conservative on the issuance of a 9.7 in a residential context, or say someone developing a subdivision or a large commercial transaction. So the 9.7 and the 9.8 are going to cover those things. And then the 9.9 we already discussed, it's the owner's coverage. So, any questions thus far just on that?
Any
Okay.
feedback from the lenders? I mean, at this point.
Frankly, I haven't done this with a lender yet. I'm doing it Wednesday at 11 in Baton Rouge with a lender that an agent in Baton Rouge asked me to go with them to go do a talk to their lender. So I will be having one with a lender on Wednesday, but thus far I have not had any discussions with lenders on any of these issues. I have offered myself to Iberia, but I haven't heard back from them yet.
Yeah. I just know that I think what happens on most residential is that they get their closing instructions, and the instructions tell them what endorsements they want. And until they change their instructions, we're going to go with what they tell us to put there.
Well,
And they're not going to be getting what they think they're getting until they change their instructions.
I believe you need to be a little more proactive with them, because there's no question that if they think they're getting the 9.3 and we don't tell them anything different, we're not going to win that battle.
All right. Ladies, and I don't know the answers. Y'all do 9.3s? We don't do
On the
that.
state
Okay.
standard state exceptions. So
That's
we just-
it.
Standard state exceptions, and we do 8.1s and 9s.
And the people we talk to have no clue. I mean,
Well, I know the people you don't talk to don't have any clue, but that's my point of trying to talk to Randy and Sean and Gerald, because I think at some point you guys are going to need to have the conversations with the lenders, both locally and even some of the local representatives of these other lenders.
It's
Even not the locals.
It's not our local brokers. I'm talking Platinum, NYCB. I'm talking.
Sure.
We don't even talk to them.
Yeah, that's what I'm talking
Yeah, the
about.
investor, that's a problem.
Yeah.
You know, but the investors like Keith's problem.
Yeah, and Keith has nothing to do with the.
He doesn't, but he can pass the word along.
That there are changes, and then they may want to be looking at.
That's right. I mean, it's all an education opportunity.
Yeah.
Yeah.
Well,
This
but
isn't.
even Iberia Bank or Iberia Bank Mortgage, they sell every one of them immediately to either Chase or Wells Fargo.
Yeah. Well, we got to get the lenders educated so they can make a decision on what they want. So they can
It's-
filter it down to us. as
Yeah,
what
to
they
me,
need.
it's really no different than 3 years ago when the RESPA, was changed. And we had to educate, and we had to go back and talk to the lenders and help them understand what they need to be doing.
But they were getting a lot of education back then because it was RESPA.
Right.
And they were getting a lot of pressure. I
Right.
don't know if they're going to get that type of
Well, they will when
information.
they understand that they're not getting the endorsement they
Yeah.
think they were getting.
Right.
So,
What is the cost of some of this stuff? What is the 9 is still the same?
the 9 itself is actually the same, and I believe the 9.3 is going to be the same cost. But again, the 9.3 is not going to have all of the additional coverage. And we have a new chart that's going to be coming out, the chart that you've seen from AgentNet that has all of the endorsements. We're going to have one of those coming out within the next few days with all of the new endorsements and the revised endorsements on it.
How much is the 35 and the 28?
Those are percentages also, but we have to, I'm not going to try to address the rates right now because it's going to be a pick and choose, and it's going to be very difficult because they're not going to all have the same percentages because they're going to have different risks that they cover. So let me go on to the 28s and the 35s. So
Have they discussed I know you don't want to get into the charges and stuff, but if a lender wants the private rights added, the 9.6.
I don't recall what it is right
Okay.
now, but it does have a rate, and it's a smaller rate, so that it does not affect a huge difference to the customers in those transactions.
Okay.
The 28s, we already have one of the 28s. It's the 28-06. It is an endorsement to cover for encroachments into servitudes and easements on the property. It's been around for about 1.5 years, but most people haven't used it because hasn't been a lot of furor for encroachments with lenders. They haven't been asking for the coverages. The 28.1 is for encroachments over property lines. It's either way. If you have a building or an improvement on the insured property that encroaches over into the neighboring property, or if you have a neighboring property that encroaches into the insured property, this would be for coverage over that encroachment. And that again is going to be something we're going to have to determine whether or not we're going to give that coverage. How long has the improvement been there? The 28.2 is kind of a pick and choose. It contemplates that there may be more than one encroachment or more than one easement that is encroached into. Or property line that may be. And it's going to be a situation where there may be an encroachment of a house that was built in 58 into a servitude, and either into that same servitude or another servitude, there may be a swimming pool that was built in 2013. Well, based on our laws, we're probably going to be more willing to give the 1958 encroachment affirmative coverage than we would the 2013, because the 2013 improvement could still be removed. So we're not going to want to cover that one, but we might want to cover the 1958 one. So in a context of where you may have more than one encroachment on the property, it gives us the ability to give coverage for some, but not give coverage for others. And of course, all of these endorsements are on a per encroachment basis. So every time we give them coverage over an encroachment, it's an additional premium. And again, most of the time these are going to be in commercial transactions, but that's the way it's going to be. The 35s are for minerals, and it's real clear. We want to make it real clear that what the coverage is for is that we're covering that in case there is an exception that provides for a mineral right, whether it's a mineral lease or a mineral reservation in a deed or in a set of restrictions or wherever it is. If there's some type of reservation of a mineral right, if someone decides to use that right to exercise the ability to withdraw the minerals from that property, then that's what we're covering. We're not covering any of the other damages. We're not covering for the house shaking or anything else. That's not what we do. We just cover title. And this is a title effect from that reservation document. And so that's what the 35s are designed to cover. The 35-06 is for buildings, because we may be willing to give the coverage as to buildings. The 35.1 is for buildings and improvements, because you may have buildings, but then you may also have driveways, parking lots, curbs, and sidewalks and things like that that you'd be willing to cover. The 35.2 is for designated improvements. If there's more than one set of improvements or one set of buildings, we're going to be able to say we'll cover for these, but not necessarily for those. The 35.3 is for land under development. Now, I think it's not a good coverage. It's going to be hard to give that coverage just because land under development with minerals, if you're looking at, we were talking about, I was up in Shreveport last week, and we were talking about 60, 70 acres, and with all the shale, there isn't a piece of property up there, hardly, that doesn't include some type of mineral reservation or mineral lease. That's a year or two old, so there's no way they're going to be any way to give the coverage. And if you're developing a subdivision, the lender may want that coverage. So it's going to be interesting to see how that all plays out, but it's going to be difficult to give some of the coverages. And that's basically the 35s. In addition to those, there's a minor change to the Alta 12. And now I'm getting off the 9s completely, just trying to get to the rest of the endorsements that are going into effect. The Alta 12 is the aggregation endorsement. That's when you're aggregating more than one policy. They might have multiple parcels, multiple mortgages, but the lender wants to tie it all together because it's one loan package. And that's what the Alta 12 does. The Alta 12.1 is a new endorsement, so if you have multiple states with multiple parcels, you may have 3 in Louisiana, 10 in Texas, and 5 in Arkansas, and the lender may want to aggregate all of the policies together. Well, they can aggregate the policies, but we get to have a state-specific amount. To give you an idea of how dangerous the endorsement is, if you have 3 properties in Louisiana, and say they're each worth $1 million, and we have $1 million policy on each property because there's 3 separate mortgages, then what the aggregation endorsement does is it allows the lender to group all 3 policies under one. So if we have a loss on this particular piece of property, then they get to aggregate all the way up to the $3 million, even though this one may have only been $1 million. So it's kind of a dangerous coverage, and we try not to give it out lightly. There's a change to the 13 and the 13.1, which are the leasehold endorsements. You may or may not deal with them on some of the commercial transactions. They basically are being modified to come in and bring in some additional coverage relating to another endorsement, which is the Alta 31, that I'm going to come back to in a minute. So the 13s have been modified to add in some of the changes resulting from allowing the Alta 31. We have an Alta 30.1. A couple of years ago, we came in with an Alta 30, which is a residential participation agreement. If the lenders have gotten together to put together the deal, then they had an agreement that they had, and And so now the 30.1 is the commercial participation agreement and or endorsement. What it basically covers is that if you have a participation agreement, the fact that you have a participation agreement is not going to affect the validity or the enforceability or the priority of the mortgage. So that's basically what that does. 31 we'll come back to. 34 is an identified risk endorsement. If you're doing a property and say you've got a subdivision and it was a 50-acre tract that became a subdivision, and at some point there was a servitude that said I've got a 20 foot a servitude 20 feet in width on the property of D'Artes, and it's 50 acres in a certain section. And you're like, okay, well now where is this? Well, if you're doing the subdivision and you're later on doing a lot in the subdivision, you're probably still going to list that same old exception because you don't want to take it out because it's really not identified where it is. So if we can get comfortable that it's probably over here where there is a servitude and where there's a drainage servitude and we feel comfortable, then, you know, we can now, again, give affirmative coverage over that, not have to add it at the end, but have specific language for the endorsement, and we also get to have a premium for it. And that one is going to be dealer's choice. We're going to look at the risk, we're going to see what that risk is, and we get to set the premium. It's going to be the only premium in the state of Louisiana that is not going to have a designated set amount. Okay? That's the 34, and then we have the 36s. 36s are energy endorsements. And I've kept the 31 till I'm talking about the 36s because the 36s are designed to cover for energy projects, whether it be a wind farm, an electric plant, whatever it might be, it's for an energy project. We have some concern because we know what kind of energy projects there are around here, and in California they basically have wind farms and they have some other like water electric plants. They don't have coal plants because they won't let them burn the coal to produce the electricity. They don't have gasification plants. There's all sorts of things that are energy projects that they don't deal with. So we're not sure how far this thing is going to cover. But the 36, the energy endorsements, basically tie in the ability of the parties to agree that movable value, when you look at a wind farm, you have a parcel and then you have improvements to that parcel being the concrete pads that the wind turbines are put on. Then they have a huge long pedestal that they sit on, and then on top it looks like a mobile home, and out of one side of it it has a fan blade. Okay? Was on the phone with you Friday when I was driving back from Shreveport, and I started telling her, I said, that is the ugliest mobile home I've ever seen. She didn't know what I was talking about, but it's the little part at the top. It looks like a mobile home, and it's almost that size. It's about the size, it's about 15 by probably 50 feet long. But it's ugly because it slopes down on the end. The first time I ever saw it was probably about 4 or 5 months ago, and I was driving on the interstate again, and I saw one, and I was looking at it and I was going, how can you stand up in it? Because it looked like it tapered down at the end to be too small. Well, that's because it wasn't something you stand in. But anyway, the value in that project is not in the dirt and in the concrete pedestals. It's in all this movable equipment on top. And I don't know what the values are, but even if you assume the land is worth $1 million and the improvements, the concrete is worth 10 million, and then the top part is worth 100 million, you can get a land policy to go from 11 million to 111 million. Because you can't do it now, because the policy specifically says we don't cover for movables. So the only way it's going to work, well, the only way it should work is through the use of the Alta 31, which is called a severable improvements endorsement. I defy any one of you three lawyers to go find in the code or in the revised statutes where we define a severable improvement. I haven't been able to find it, but still, that's what the endorsement is going to be called. It seemed to me it should have been a movable property endorsement, because that's what it really is. And when you look at the definition, it's pretty close to the definition of movable property. It's property that is added to the land but can be removed without damaging the land or without damaging the piece of equipment itself. So the movable property endorsement is going to help on projects like that. The majority of them are going to be energy projects, and the 36s were designed to tie the changes in the 13, to tie the 31, and to tie the general policy all up into a barrel that makes it apply for an energy project. I have some suspicions because I've worked on a number of casino projects up in North Louisiana and other parts in the state, and they are using as values in those transactions more than land or improvement values. They have kind of been taking a risk because we didn't have the severable improvements endorsement, to the extent of, what that endorsement does is says that we as the title insurance company can't, at the end of the day, take a premium for the expanded amount and then say, but we're not going to give you coverage because we don't cover movable property. Now, we're not covering the title to the movable property. The only thing we're covering is that the value is included. And if they have to relocate or they have to buy new ones because there's a title defect. Remember, everything in what we do is about there has to be a title defect. So if there's a title defect that causes the lease to fall apart or causes them to have to move their stuff, then that's when these things would come into play. And that's the endorsements are going into effect on September 1st. Obviously, the latter ones, unless you're doing energy projects or large commercial projects, which I'm sure you would love to do, maybe get a casino or two, those can be nice, then, you may not have much application for them, but that's what the endorsements are. And if you have any questions, I'll be happy to answer them.